Hey everybody, DayTraderRockStar here with you, and another great video. Part 1 will be a market radar, talking about the market conditions, some of the trades we've been taking. Part 2 will be HPS setups for the members of Day Trading Radio, so you don't want to miss that. We got a big list for you today, a lot of great stuff. It is Friday, and we just had a big storm here, but things have been working out great this week. Took a lot of things off the table the last couple of days. We got out of our Nielsen, which was a beautiful setup. Under Armour came back, gave us a nice profit yesterday. And again, I'm getting way ahead of myself. There's so much I wanted to talk about. Right now, the markets are positive. As of Friday at 11:38, we're up. S&P's up 5 and change. Now, let's start off with the first thing we did yesterday. Oh, man, where do I even begin? A lot of energy today, so I apologize. It's probably spilling over. AVB, this room, I want to remind you to look at this one too. I got this one set up for something big for us. All right, so yesterday we had a nice little rally. We're testing this recent high, and yesterday we broke through it. So today we're looking for a follow-through breakout. I mean, everything here is embedded. Everything's strong. I honestly believe that we can't apply a lot of the things that we used to apply in a normalized market where, I don't know, it just seems like it was the status quo. The agenda was always the same. Today we have a new administration. We have the potential for anything to happen in the economy because some of these things have never been tried before, and we don't know where it's going to go. But the market here is actually optimistic, it looks like, on this. And we don't know how far this rally could go. So I'm still very bullish, not looking for any shorts in this market. This breakout is really strong. I like this breakout a lot. It comes after an attempted breakout here, and then we kind of failed, pulled back, and then we had a gap up and a consolidation. Now we're starting to pull away. So this might even get some feet under it. It all depends on what kind of news comes out over the next couple weeks also, but I do think we have more upside here. Not much to go into on that. The 5-minute time frame on the day, we're hanging around that. It's starting to get oversold, so that's actually going to be a nice little maybe bullish pop here, get us going again to the upside. That might happen during this video. And you can see right now on the futures, the market here continues to kind of climb, put in these little flags, and then break higher. We have kind of another little flag here. And, like I said, that 5 minutes starting to curl back up. We might even get a nice move out of this to the upside. And the trend might just continue to get stronger today. As we can take a look over the last couple of days, you can see these flags playing out to the upside. But we manage things on a little shorter time frame here at Day Trading Radio. Yesterday we did get into these, because we had that breakout, I was looking for a gap up and a continuation move today. So we ended up taking calls on the SPY. And, we've been doing this more and more often and kind of discussing the strategy behind it. Different ways to take advantage of a market move. But a lot of people are not going to just pony up $231 to buy the SPY common shares. You could buy the options on this. You could buy ETFs. You could, especially if you're trading with the tradeometer, which is giving you these outstanding intraday moves. Even trading the options on the SPY will give you a great return. Now, we picked up. I just want to show you what we did here. We picked up calls yesterday for today, and today they expire. So it was like you have to deal with you're either right or you're really wrong. All right. Now here's both of these charts down here. So I don't know why they're both down here. I have to get rid of one of them. Oh, I got rid of them both. Didn't mean to do that. I apologize. All right, well, what I wanted to show you is the chart of the options. And again, this was not a technical HPS setup. This was more of a judgment call on the rally, just the overall mood in the market, and really especially the breakout that we had, and the attempted breakout a couple weeks ago that failed. Now another breakout. I think we're going to get a little bit more further upside. And again, I already went through my whole thesis about longer term. But we got into that trade, and the trade looks pretty much like this. Now remember, we're basing our trade off the S&P 500. There's many different ways we could trade that. We could trade it using the futures, using futures contract. What in my case, I was trading the options on the SPY instead of the options on the SPY. This is interesting because if you have a good move, you can actually see great returns. And I picked up those options yesterday at 89 cents. I might have been right. I forget what time that was. I'll be around 2 o'clock. Yeah, I think it was back here. Right after 12 o'clock. So 89 cents we got in, and we'll just call it right around here. And I was planning on holding this into tomorrow. I like the strength in the market. I expected us to kind of close pretty strong, and then really it was about to gap up. We got out, so we got in 89, and then we got out here this morning. Wanted to sell it when I got in today. I wanted to give it a little time because we expected that gap up and a little further push. So, say around 10 o'clock and stuff. That worked out fine with me. So we got out at $1.33. $1.33. So now you can start doing the math, and I'll just, have an easy enough way. Oops, what's going on there? There we go. Easy enough way to kind of show you that got in about 89 cents. It was right about here. We take that and we got out right about here. That's about a 50% move. We got about 40-something cents on it, 44 cents on it. That's a 50% move on our money. Times 5. So that's a great return when you think about when people talk about trading and what the average return in a trade is, or long-term investments and stuff like that. You want to have a nice return, but most times a nice return is considered anything above 5, 6, 7%. When you get 10%, you're talking, wow, that's a great return. 20%, wow, that's an amazing return. When you talk about 50%, 40%, but these are the type of returns you get using these SPY weekly calls and puts and trading short term. But it's not going to happen all the time. It's you have to wait for the right situation, wait for the right strength, and then jump on the train. You don't want to fight it. You want to continue to just roll with it. And this could be another setup. So we use this in our arsenal of things every couple weeks or so. So now I had another thing I wanted to show you. We talk about what this video is about. The second half of this video is about the HPS setup, and I got a couple of questions in the room this week, and I don't know if I went into it too much. We were just doing too much, but I wanted to cover that a little bit more and how important that HPS, what the definition of HPS is, and how is it different from what we do on the radio every day. Well, on the radio, we're kind of, the market's under a microscope. Look at this. We're analyzing every single pattern. But these patterns play out they play out over and over again. And what's great, just like this, you have a nice channel. You could see this on the 1-minute chart. You could see that on a 5-minute chart, a 60-minute chart, a weekly chart, a monthly chart. Over time, you're going to start to see repeating patterns. Understanding how those patterns work makes it profitable to get in at certain times. But there is better times. There's these high probability zones when we start to recognize these patterns and know when the pattern is going to reverse. In this case, we're talking about the bullish side, but we do things opposite for the bearish side. It's the same thing. We just take the same signals, but they're going to be opposite. They're going to be sell signals, and they're going to be based opposite charts usually. Lots of times our buy signals are based on the lower part of the chart here on the stochastics. The sell signals would be based on the top part of the chart here, the divergence that are setting up there, which I see one right there. But the key is, and this is what I really stress, and we had a great couple shows recently. We talked about trading strategies and stuff. One of the more important things that we have to remember that this is a business. All right, when I say business, you should have a business plan, and that business plan is your trading plan, your method, and that method must contain a entry strategy and an exit strategy. All right, so you always usually have a reason why you're getting in, but you need to have a reason why you're getting out also. And it's great to have it automated. That's all good, but that's also good. Then you have to have that place that automated stop. We're not going to go so much into what is the right and wrong place to play that right now, but this is more about the concept of having a strategy and sticking to it. Because we could find the best entries. There's no doubt now, but I think everyone understands that, when we trade, we're looking at a certain entry, and when we see it set up, there's 9 times out of 10, it's heading in the direction that we want. And that's so important. The tough part of that is, and again, I want to show you just a chart here, is really waiting for that to happen. Now, again, I did a very special video this week. I'll touch base on it right here because it was, the one important part of this is, what are the setups we're looking for. Now, I just take a chart here like AVB because we've been trading this recently. And you'll notice, important parts of a chart, trend lines, these little circles are areas of interest. There's candlesticks out here. This is a very organized chart. It has a great read on the stochastics up and down, and it has divergences. So we're going to go over this chart in a second. But let's take a look at what we are looking for and what qualifies an HPS setup. All right. So HPS setups. I threw out this question the other day on the late night show. I said, what would be my top 5 setups to look for during the trading day? And again, if you're going to look at something, everyone wants to know what the number one is. If you had to go to something, where are you going? What if you had one shot, what are you taking? So if you had one setup that you needed to take every single time, what would that be? But again, that would be boring. So we gave it top 5. Truth is, the top 3 were pretty easy to recognize. It's the last 2 I kind of had to throw in there. So when it comes down to HPS, the top 5 is not really, the thing. I'm really paying attention to the top 2, maybe 3, top 3. And again, the top one, of course, is the lane divergence. Now, I do education on this all the time, how to develop, how to spot them, how to see them, how to trade them, what they mean. That's our bread and butter right here. So it is our number one thing. 1 minute to 5 minute chart for the scalpers and intraday traders. And, this works great on the 60-minute time. Daily is one of the best for swing traders. And a double top divergence, which is a little bit different. And when there's, and you go into the steepness of the stochastics and how strong that divergence is. Here we have a couple examples here. This little lower low here. I didn't even put this one in here. See this lower low? So we gap down in a lower low. But we started turning back up here on the stochastics. And even though this is a shallow steepness, and this angle between this low and this low is not as steep. But that really represents how high you are above that 20-period moving average. So I always say it's very important. This is a criteria. I want to go into the criteria now. The buy divergence, that stage 1. I didn't even show you that chart before. Let me go back down to this chart. I apologize. I was talking. I wasn't showing the chart. But here was that divergence that we were just talking about. And here's that low, and here's the higher low. Here's the low, and here's the lower low. So that's exactly what we're looking for.
Tradeometer overbought.
And when we have that, that should be a go-to trade. Number 1 on the setup. And again, you know how to spot it, identify it, and stuff. And the criteria, like I said, I just want to go over the criteria with you. I think the important part is having the stage 1 should be under 20, and that low that bounces back brings it back above the 20 line. And then the divergence needs to hold, that stochastics needs to hold above the 20 line, and then as it's putting in a lower low on the price. And then we have some other things that help out with the 5 and 60 minute stochastic should be moving up. If you're going long, the lower low should be capped with a reversal candle. That's important. That's something we haven't really talked about, and divergence signals are the best one lined up with the lower trend line. So we go back to our original chart back here. And you see so many different things. We have the underlying trend line that's really established. We have big candles. We have a nice reversal candle here with an oversold stochastic, and that's what we're looking for. Here we have the divergence, but it would have been hard to measure out this channel line because it wasn't really established there. But there is here's another nice divergence back here. You can see that higher low and the lower low on the price. Really nice one, and just the rip in the price afterwards. So this is you see the rip in the price afterwards, the rip higher, the oversold levels up higher, trend line starting to develop, the wedge pattern breakout, oversold. We just got back down to an oversold level in AVB, Avalon Bay Community, and it just like clockwork, it moves back up. So there's real basic things that we look for in a chart. You know, when those things come up, we start to, put together the pieces. There's enough, enough data there, like a reversal, maybe something else, a divergence, the oversold, recognizable pattern. All that lines up for a big move coming. We've proven that time and time again on all different time frames. This is an example on the daily time frame, but this is the same exact stuff we look for on the intraday chart on the 1 minute, 5 minute time frame. Now, that's the key to success. Do you have it to wait for this level? I mean, you could take a shot, that this continues to go down. But what if you get in here and it starts moving up? There's a lot of chop here. You want to be able to really identify those reversal areas and go in with confidence. And this is what we try to do. It's hard to catch. And again, this works on both sides. Here you have an overbought level. And again, up here, and you pull back until you get oversold. So I'm not against saying you need to always be long. We have the same type of setup on the short side. So you could see a divergence on the short side just as well you could see it on the long side, and we especially see those a lot on the chart, like this type of chart right now when we're talking about the daily chart. Now you can see that flag broke out, pushed up higher. Now I think there was a couple sell divergence back here a couple days ago. I think, well, that's that. Market's pretty nice. Yeah. I think there was a little divergence here, but I wouldn't count that. There was, I think, the next day. I'm not going to waste your time with it. We already went over that on a couple other videos. Market here screaming higher. As we go into it, I'm still doing my research, but this is the first part of it, and I just wanted to stress how important the HPS definition is. So when I do an HPS watch list, which is coming out next, it has to fall into that the criteria of what I'm looking for. And again, one last time on that, I'm going to go back to it. Lane divergence, the trade. Oh, we didn't even finish the. We just talked about the lane divergence. The second one, the tradeometer alert. That's during the trading day. Tradeometer alert. We don't look at that as the thing. Triple stochastic flag setup, trading day. Oversold stochastic channel line bounce. Trading day, but also could be a HPS longer term playbook play. Wedge patterns, like we just showed you. Great to look on every time frame. Now, I didn't talk about candles. One fast mention of candles, that reversal candle we're looking, it needs to take out the previous lows, needs to have a big wick shadow, and preferably have that shadow twice as big as the head. That would be a good reversal candle, and for us to close in the case of long, close to at the top of the day, at the highs of the day. Now this could give us a divergence here too. It depends on how the whole situation. Lots of times we will see that candlestick set up exactly with a divergence, and that is a go-to trade. That is a money-making trade, and you need to step up to the plate when you have a big candle and you're oversold, and the trend lines. All right. Before we start the HPS video, because I have no stops, let's talk about some of the previous trades and just kind of review why they worked out and why they didn't work out, if they didn't work out. Nielsen. Great pop. Everything was great on this. I mean, what was the reason we got back into this one? I think it was to be a series of higher lows back here, and we had the momentum on our stochastic. So we got in, I think it was right about here, right around that 40, 50 area and stuff, and took profits on this pop, 42 and change. It still looks great. It was a divergence. Originally, I got in on this, what looked like a divergence here, and it didn't move higher, and I ended up getting out of it pretty flat, a little down on this. And I said, well, I want to let this play out and get a better signal. And I think this signal was better. I do think it's going to head higher, but I'm not going to chase it at this point. The Kellogg worked, great. This was a nice consolidation. Even though we made a profit and took it off before earnings. If you didn't, well, look at that. You had a great pop on that. So there's a couple other good ones here that we took, and I'm not. I have all the new stocks in front of me, so I got to actually set those up. The Under Armour. All right, let's take a look at the Under Armour here. Come on. Having a hard time getting to my charts here. Market here, kind of a double top, and we had a tradeometer set up here. You know what? I might even go long here if I have my DOM still up. I mean, go long. Excuse me, go long. We just had a tradeometer, a short signal. That's what I meant to say. I can't find anything. Kellogg worked good. Well, just as well. I'm not sure. I have to set up my DOM again. It's all shut down. I gotta dig it out. And I'm in the middle of research, so almost probably gonna save me. So what were we up to right now? I was trying to get my other charts up on the screen. It keeps on kind of flashing back to my futures chart right here. I'm trying to keep this one up on the screen here. The under A here. So Under Armour here, nice little bounce. We talked about trading this one up into the gap. We got out of it, nice profit yesterday. Look at what happened today. I mean, I've been banging the table, and I said, watch that 2230 area, that gap. It's what we call a gap resistance. Where we gap down, and that candle, the high of that candle, that gap down, that big space here is a gap. Gap resistance starts at the high of that candle. And usually we get a push up to it and pull back, then it comes back and tests it again. And sometimes we broke through, sometimes we pull back a little bit further and test it again. But usually that first test is a great short opportunity or a great target. In this case, we opened up right at it. We opened up right at 22.22, basically 22.20. We opened up, and then from that point on, we've been selling off. But we got out of that yesterday, and that was great. Usually I drop a pretty good one on you right now, but I gotta say that most of these are gonna save to the watch list. I think my best bet would be right now is probably taking another options, SPY calls into next week. SPY calls into next week. I know there's always news out there. I think that's what the biggest, it's a game of musical chairs. You don't know what's going to come out and stuff. So, market could react on that. But overall, market at the highs of the session going into next week. Things are looking pretty good. We got a breakout. Maybe we get a follow through. Right now, we're going to just concentrate on these HPS setups next and wait for our trade to come into our view, a perfect trade. There's a lot of good ones that are setting up right now. All right, so I hope you enjoyed this video. For more information, just visit DayTradingRadio.com, and you can watch us every single day from 8 o'clock to 4 o'clock, breaking down the markets, trading the markets, having a great group of traders in our chat rooms and our trading rooms. We have futures, options, and, of course, everything else that goes along with it. All right, we'll see you in the markets. And members, continue to listen. This video will continue on for you.